Good morning, I'm Chris Beecham and welcome to IG's morning market headlines for Thursday the 23rd of May, with a rather heavy bout of selling going on this morning on the FTSE, down 130 points just above the 6,700 level. Now the reason for this is threefold. We had Bernanke's testimony to Congress yesterday, the Fed minutes and also Chinese PMI data. Now yesterday Bernanke's testimony suggested that we were going to see a lot more Fed easing and markets rallied on the back of that news, but the Fed minutes painted a rather different picture indeed. Although Bernanke has striven to leave his options as open as possible, the Fed minutes did seem to indicate that the committee was far more divided than we had previously thought, with some members thinking that a tapering, i.e. a reduction in QE, might come as early as June thanks to improving economic data. Now this hasn't been the perception for markets for quite some time. We expect them to carry on for at least the next few months and perhaps start thinking about tapering towards the autumn or indeed December. But for the moment we seem to see an increase in the possibility that we might see a tapering before then, so our markets somewhat worried on the back of those Fed minutes. Now, the major mover overnight was Japan, down over 6% thanks to much weaker Chinese manufacturing data. This was the official HSBC number, not the number from the Chinese government itself, so investors attaching slightly more weight to this. This showed that Chinese manufacturing had in fact contracted for the first time in a number of months, so investors understandably spooked by this, and that's why we are seeing heavy losses across the board for equities this morning. Really, I think it's just a change. Had we had one of those events by itself, then investors would be far more sanguine, but three together does suggest perhaps a sustained period of risk aversion coming for at least the next few sessions. However, it doesn't change the underlying story that we are seeing continued rally in equity markets, fueled by both improvement in economic growth and also fundamentally easing central banks. We know that whatever the Fed does, it is still pumping 85 billion a month into the mortgage market, so even if that is reduced slightly, it's still an impressive bout of easing. So not really an underlying change to the story, but perhaps just a bit of caution creeping in for investors. Equity news really not being paid much heed this morning, although United Utilities has managed to rise about 1%, perhaps the only FTSE 100 stock that is making any real gains after a good year, and also a boost to dividends. So IG clients 90% long there and seeing further gains. Looking ahead, it's a busy day for the US with existing home sales, jobless claims and a PMI number coming through from the US, but the real focus remains the aftermath of the Fed, China and the Bernanke comments. And really seeing how investors play this in the next few sessions is the key element to watch for. We are expecting a weak open for the S&P 500, down around 15 points at 1640.